If you're hunting for one of the hottest real estate markets on the planet right now, well, all signs point to Mexico's Riviera Maya. We've got our hands on a new industry report that's just packed with some frankly incredible numbers behind this boom. So we're going to break down exactly what it all means for you. Let's get into it.
Okay, so the very first thing that jumps off the page is this number. A full 80% of all property purchases in the Riviera Maya are made by international buyers. Just let that sink in. That one statistic pretty much shapes everything about this market. So, what in the world is pulling everyone in?
That's exactly what we're going to unpack. We're going to dig into the key findings of this report to really get a handle on the forces driving this thing, understand the market dynamics, and, most importantly, figure out where the biggest opportunities might be hiding for 2025.
All right, first up, let's just set the stage. The analysis makes it crystal clear. This isn't just some small uptick we're seeing. Oh no, this is a full-blown boom, and it's got some very, very specific drivers behind it. This is the bottom line, pulled right from the report's executive summary. I mean, the authors are making a seriously bold claim here. They're basically saying that the Riviera Maya is a top-tier, rock-solid market that performs well even when the global economy gets a little shaky. Now that is a powerful statement for any investor to hear.
So, how is this all happening? Well, the analysis boils it down to two massive engines just fueling this growth. First, you've got tourism. We're talking over 30 million visitors a year, which creates this incredible, constant demand for rentals. And second, just game-changing infrastructure. The Maya train is now fully up and running, connecting the entire peninsula. And the brand new Tulum airport, it's already bringing in over 1 million passengers, making that whole southern region easier to get to than ever before.
Okay, so with all that demand pouring in, what does the market itself actually feel like on the ground? Well, the report couldn't be clearer. It is firmly, without a doubt, a seller's market. And it all comes down to one key metric.
Now, before we dive into the data, you gotta know this term, the absorption rate. It sounds complicated, but it's not. It's just a way to measure how quickly the available homes on the market are getting snapped up and sold. A high rate means houses are flying off the shelves. A low rate means things are sluggish. Simple as that. And this chart really shows the unique situation perfectly. See, at the current sales pace, it would take about 28 months to sell every available property. Now, normally, you look at that and think, oh, that's a buyer's market. A balanced market is usually around 6 months. But here's the twist. Because that flood of international buyers is so relentless and so consistent, the market just soaks up all that supply. And that keeps the sellers firmly in the driver's seat when it comes to pricing. So the huge takeaway here is that imbalance. It's basic economics, really. There are just way more people who want to buy and rent property than there are properties available. And that simple fact is what keeps putting constant upward pressure on prices right across the region. Now, this is where it gets really interesting. The report makes it clear that while the whole region is on fire, the three main cities, Cancun, Playa del Carmen, and Tulum, they each offer a totally different kind of investment opportunity. This is not a one-size-fits-all kind of deal. First up, you've got Cancun. The analysis really frames it as the established luxury gateway to the region. Its defining features are incredible connectivity. We're talking hundreds of direct flights and a big focus on high-end branded residences. Think Ritz-Carlton, St. Regis, that kind of thing. This is the luxury play for sure. And here's the number for Cancun that'll make your jaw drop. For 2025, it's forecast to see a massive 14% price appreciation. That means it's expected to lead the entire region in capital gains. You know, the profit you make when you eventually sell. Next up is Playa del Carmen. The report describes it as the cosmopolitan heart of the Riviera Maya. It's a mature, stable market that's absolutely perfect for investors who are looking for consistent, reliable rental income. It's got the infrastructure, the year-round demand. It's a true workhorse.
And yup, the numbers totally back that up. For short-term rentals in Playa, the data is pointing to a really strong return on your investment, somewhere in that 8 to 12% range. This is the spot for the income-focused investor.
And finally, there's Tulum. Now, you might have heard some talk about a market correction there, and the report tackles that head-on. After a period of, let's say, over-enthusiastic building, the market is stabilizing. And that correction has created what the analysis calls a long-term value opportunity, especially as Tulum pivots toward a more sustainable, eco-luxury vibe.
What really makes Tulum a compelling value play is the price to get in the door. You can still find studio condos starting around $150,000 US. That's a pretty accessible entry point for investors who are looking for that long-term growth potential in a market that's really evolving.
This chart just lays it all out so clearly. You can see Cancun way out in front with that projected 14%. But you also see that healthy, stable growth predicted for Tulum and Playa del Carmen. Each one tells a different story, right? You've got high growth, you've got value, and you've got stability.
Okay, so now that we know the lay of the land and the differences between the cities, the report then offers a super clear playbook, matching different investment styles with different goals. This is where it gets really practical and helpful. The report lays out a clear guide. So, for instance, if you're a high net worth individual, it's pointing you towards luxury properties for those premium returns and lower risk. If you're all about that monthly cash flow, well, short-term rentals are your game. And if you're looking for security and total convenience, branded residences with professional management are the answer. It's a fantastic guide for navigating all your options.
And finally, the report looks to the future, and it identifies this really fascinating cultural shift that could be the key to the market's long-term health and stability.
This quote right here says it all. The Riviera Maya is actively giving itself a rebrand. It's consciously moving away from that old spring break party image and becoming a place known for sophisticated, discreet luxury. It's turning into a destination for foodies, design lovers, and wellness seekers.
And here's why that is so important for you as an investor. This evolution, this rebranding, it's attracting a higher quality, more affluent tenant and buyer. This isn't just some fleeting trend. It's a fundamental shift that creates a more stable, more resilient, and ultimately more valuable market for years and years to come.
So the report lays it all out, a market that is absolutely booming, driven by tourism and massive new infrastructure with distinct opportunities for high growth, steady income, and long-term value. The only real question left is, which one of those opportunities is right for you?